Hi, and thanks for joining us for another video here at Street Smart Options. This is Jim Bunker speaking, and I'm here with my business partner, Jonathan Sherman. So, folks, if you haven't joined us on our free Facebook group, I don't know why. It's 100% free. It's located on Facebook, very easy for you to find. All you need to do is go to facebook.com/groups/, Street Smart Option Group. Now, folks, if you're not constantly listening to the news and doing research yourself, that's one of the reasons you need to be in our free group. And it's also, honestly, one of the reasons you need to take a look at streetsmartoptions.com, because Jonathan does so much research. Tonight, he's going to be talking about a biotech stock that is just out of this world, in my opinion, because it's literally like things that I read about and heard about when I was a kid. Very, very futuristic work that's being done. And honestly, it's not something that I think a lot of people would know about unless you're doing research on biotech stocks yourself. So with that being said, Jonathan, can you take us through it?
Yeah, thanks, Jim. Well, the company that we talked about in our Facebook group on August 22nd was Invitae, and they provide a rapid, low-cost analysis of human DNA samples, and they're involved in 3 different spaces in this DNA testing. Looking at their website, we can see that they talk about diagnostics. So if somebody has a disorder and they think it's genetically related, it might be a baby or a young youth, and they can look at the DNA of the person and see if there is a genetic cause for the problem. They also help people with reproductive health. They do screening of embryos pre-implementation so that they can see if there's any possible genetic problem that may occur. And then they also do proactive health kind of testing where a person will want, they may want to see whether they have a proclivity for cancer or cardiovascular disease or something like that, maybe something that runs in the family. And the company also helps with broad-scale research projects where scientists may want to find out if there's a widespread genetic cause for a certain cancer, and this company will get involved and help with that kind of research too. Now, the reason that we started looking at this company back in August 22nd was because the company was coming out of a long basing period here where there was an IPO back in 2015. And so here we are in 2018, stock's making new lows, and then it starts coming off these new lows and consolidates tightly. Now these little green volume bars are popping up as this comes off new lows, and it goes over the 200-day moving average. In this case, this is the 40-week moving average, which is kind of synonymous, right? And it consolidates tightly in this little range here where institutions are accumulating millions of shares, and it's not moving in, it's not giving back any of these gains off the bottom. And then the company comes in and reports a really good earnings report in the early part of what is this, August, right? This month. And so that came in with a big volume spike. And the chart just looked really ripe at this point with this big volume spike, that big positive news, this tight consolidation period that occurred in July. And then, looking at the actual news, what was so great about this news, right? Well, they did a press release, and the press release showed that the company reported annual revenue growth of over 160% in the quarter. This was its, raising in second quarter. So this was its second quarter report. And so it reported this huge revenue number, and it was a lot higher than analysts were expecting. And now, mind you, the company's not profitable yet, but with this kind of fast revenue growth and stationary costs, where costs are going to stay relatively stable as revenue grows, and eventually they're going to turn earnings positive, cash flow positive, and they are the fastest growing genetic testing company out there. And so all those things encouraged us that, this move was real. It's driven by fundamentals in revenue growth and an improvement in cash flow, though still cash flow negative. And with this chart, coming back to highs not seen since early 2018, and all this good positive volume growth, we wanted to get involved in the stock. And plus, the market's in an environment now where it's rewarding speculative momentum plays, and this particular stock, fits that kind of recipe where it's a speculative momentum play with improving fundamentals. And so this is on the 22nd. Now, just a few days later now, just a week later, the stock moves and it pops all the way up to 15.5 here. And we're getting out. We took profits already at this point because we're up, nearly 50% in just a couple of weeks. And the stock itself is not a profitable stock. And plus it's a low price stock, at this $15 range. And now, mind you, we're happy to get involved in it again if this thing can consolidate and then start moving again. But a stock that goes from, here it's a low of 5 to high of 15, it triples in just a matter of 1, 2, 3, 4 months. It's not a stock we want to stay in that cuts from this low price area. Now, if this was actually a higher price stock, if it had tripled from, say, the $20 area to the $60 area, we actually might be more inclined to stay in it. And we'd be happier too if it was reporting positive earnings. So this was a momentum-driven spurt. And so we took a quick 2-week profit in this thing, and we're out, and we'll look for a new entry point. Now, we might be early. This stock may still go up quite a bit, but we're happy with the profits in a stock that is so inexpensive. Let's look a little bit at the company's fundamentals. And we can see that this is the quarterly earnings, annual earnings, and you can see sales growth is ramping up. Sales growth is more than doubling every year on an annual basis. And then you look at the quarterly basis here, and it's just it's ramping up even quarter over quarter over quarter. So it's pretty impressive. But earnings-wise, the company isn't reporting anything in the way of earnings. And you can see earnings, the earnings they're losing as much as they're making, right? They lost $123 million in net loss from net income. That's on a GAAP basis on revenue of $68 million. So that's incredible, right? I mean, they lost $123 million, but on $68 million in revenue. So, I mean, that's not sustainable, right? But analysts expect them to, turn the corner maybe in the next couple of years. Cash flow negative. They're just burning cash. So, it's a speculative play, but they're going to turn the corner if they continue this growth rampage and they can show that their fixed costs are stabilizing, that they're not, their costs aren't like accelerating like their revenues are, and they're not. In the latest quarter, their costs didn't accelerate like their revenues are. So eventually the revenues are going to start producing some profits. And in fact, look in the quarterly results here, for operating cash flow, you can see that they actually had 2 quarters of positive. No, that's investing activities. No, they've had negative cash flow for quarter over quarter, but we had a little improvement here. It went from minus 32 million to minus 25 million. Now, mind you, looking at the balance sheet of this company. This is 1 quarter. They burned $26 million. They have, from their IPO and other investments, they have cash and short-term investments of, about $80 million, right? So they have almost a year's worth of cash on their books. So they're probably going to have to raise some additional money or take on a little more debt to fund operations, because if you look at the analysts on this, we can see that they're not forecast to turn a positive profit in 2019. And but with that sales growth and the speculative environment that the market's in, it was certainly worth a shot, and it worked out for us really quick, nice profit on that stock. Let's see if there's anything else that might be of interest on this. Let's see. It's a genetic information company, right? So that's how they describe themselves, as a genetic information company, and then in these different segments, located in California. I guess that's all I really want to talk about with Invitae, and it's a stock to keep an eye on, and maybe it'll give us another entry point, and maybe we're early getting out so quick, but taking a quick profit on those cheapy stocks, like anything under $10 that goes to 15, is a good idea, because a lot of times they base more and give you another opportunity to get in. All right, that's all I want to say about Invitae.
Fantastic, Jonathan. Thanks for that. So, folks, again, our base level program over Street Smart Options is less than a cup of coffee a day. So in a 30-day period, you're spending less than $3.50 a day to get in on our training program, where Jonathan actually has information like we've just shared here, but the actual information on how to take action with it and make money. So if you wanted to see a 50% play like we just talked about with this stock, you should definitely be in our members area and be in our paid group so that you can take action on that and you can use that to drive your profits and really drive your bottom line. We're looking at the end of Q3 coming up here soon. We're going to be in the last quarter of the year, and I don't know how your investments are doing, but if they're not doing real well, you should definitely be taking a look at us over at streetsmartoptions.com. Thanks for your time and have a great day.